Hello, it's time for a banking video. So last time we shared a few terms for banking. And like I said before, banking is a topic that for students can be kind of difficult because they don't use these words in everyday life. But it's time to start, right? Okay, so today we're going to just talk a little bit about net income or gross income and net income. Okay, so gross is not ugly, but gross as in this is the total amount of money that you made in a week, in a month, or it could be even 2 weeks, whatever. That would be the total amount of money that you would make, would be gross income. Then there's also net income. Net income would be the money that you make after you subtract any kind of fees or things that you would subtract from your employer. Okay. So, like federal taxes, state taxes, insurance, social security, any other little bits of money that your employer might need to take out. And they will let you know ahead of time what types of things they're going to take out of your check. It's not like a secret or anything like that, but they just do it on your check and then they keep track of how much money you made for that month, how much money they take out for each individual thing, and then they will give you the net number. Now, the net would be the amount of money that you have to work with when you take it home and you need to make a budget. Have you ever made a budget? Okay, a budget is going to be the things that you need to buy. Okay, so your budget might include food, rent, maybe a car payment, insurance, tithing to your church, or any other kinds of things that you need to pay. So, what you want to do is you want to keep a list of all of the things that you are going to need to make payments to or whatever during the week or 2 weeks or monthly. So you make a list of all of those payments and then you figure out how much money you make, how much money you have to spend, and then how much money you want to put into savings and other things like that. So that would be your budget. So in the book that we are using right now. Um, I also wanted to talk about, before we get into the budget, I wanted to talk about one of the ways that you can make money would be by commission. We talked about that in the last video. You might work per hour. You might get an hourly wage, maybe $10 an hour or something, or $11 an hour. And every so often, you might get a raise on that, and then it would increase your pay. You might get a salary. So that means you're going to get the same amount like every pay period. You might get a commission. Okay. So commission would be that you would get a percentage of your sales. So people that do like real estate or they sell cars or maybe furniture, big ticket items, they might get a salary and a commission. And so commission is usually a percentage of your sales. So I have a problem here. It says Mr. Ashley, his base salary was $950 per month, and he got 6% commission on his sales of $8,000. Maybe he sold, I'm thinking maybe furniture for that price. Okay. So his base salary is $950. That means he's going to get $950 no matter what happens. And then when his sales is this much, he's going to get 6% of that added to his base salary. Okay. Now there are some jobs where you only get commission. But this one you get a base salary. So what we're going to do is we're going to take the $8,000 and we're going to multiply that by 6%. Remember, we change that to a decimal. Multiply it by 6%, 0.00048. Okay, and then remember, we have to move the decimal point. So he's going to make $480 in commission. So we're going to add 950 plus $480. So altogether, he is going to get his gross income is going to be $1,430. Now, in the banking section, there's going to be a lot of percentages. And that's something that you need. That's why we studied that before. I have a few videos on just percentages because when you have banking, you're definitely going to use percentages a lot. So if you don't have those, mastered, you might want to go back and check that out. But commission is always going to be a percent of the amount of sales. Okay. So say, real estate people, they might get 6% of their sale. And usually that's going to be 6% total for the entire company. And then they split that between all of the real estate people. So your real estate agent isn't necessarily going to get that much money, but it's going to be given to the company and they split it up among the realtors. And so I also wanted to talk about the W-4 form. The W-4 form is the employee's withholding allowance. This is a form that you are going to fill out for your employer, and you're going to tell your employer what your dependent number is. And if you claim 0, then that means they're going to take out as much as they can. If you claim like 1 or 2, that would be yourself and maybe 1 dependent. If you're in a family, then you might be able to claim a higher number. Okay, so the higher the number, the less money they take out. And what they do is they'll take out that money every time they pay you. And at the end of the year, when you do your taxes, you fill out all the forms and you either get the money back or you have to pay money, depending on how that all works for you. So it's good to claim, so at least maybe you come, you break even at the end of the year. People don't usually like to pay in. They do like to get money back, but it just depends on how you look at it. So I also wanted to tell you about the W-2 form. Okay, the W-2 form is the form that you are going to get every single year. That's on this part. And at the end of the year, your employer is going to tell you how much money you made and how much money they put in to taxes. And then you use that for your tax form. So the W-4 is what you fill in for your employer. The W-2 is what you get in January. So all the places that you worked, you want to make sure you look out for the W-2 form in the mail. Okay, I also wanted to talk to you about, there are also property taxes. That would be like a percentage of the price of your house. That you might not have to worry about until you actually buy a house. Okay, in the next video, I will go ahead and talk a little bit about budgets.